But the bright spot here is that the company has recorded a good profit against a loss in the same quarter last year. So all that happened in the quarter, and what's the outlook going forward? To discuss all of that, we're now joined by Rajesh Bhatia, the group CFO. Hi Rajesh, very good afternoon. Thank you so much for joining us today. First up, let's start talking about your financials. Like I said, revenue was absolutely flat, so were margins, but profitability, that has recovered very sharply. So tell us, what were the operational improvements that you made in this quarter gone by, which has resulted in this profit this quarter?
I think the major reason for this turnaround is that, we had earlier exchange translation losses in a few of our subsidiaries, which are now taken care of. And that's the reason that, while there has been an operational improvement on the costs and everything else, like, post the power cost in European countries were pretty much elevated, which are now much better. So these two are the main factors which have led to a positive PAT instead of a negative what we had in Q2 and H1 of FY25.
So was there any one-off as well which was accounted for this quarter? And also I want to understand about the margins that's largely stable around 10.2%. What is the guidance there?
I think for the year as a whole, we look at around 11.25%. Margins, blended margins for the year as a whole is what we are looking at. And currently there are some pressures on the packaging films business because, India imports have risen very sharply in H1 of this year versus H1 of last year. They are up more than 100%. So, there's a lot of imports being happening, which is capping the margins in the Indian markets. And that's the main reason that, the earnings, the EBITDA margins are not as we had anticipated to be about 12.5%. So for the year, we'll still achieve 11.25%.
So that's about the guidance. But Rajesh, let's also talk about some segments. Now, the packaging business, that remained absolutely flat year on year. So if you could tell us about any underlying factors that are holding back demand, and if there's going to be an improvement in the second half of this fiscal, and if so, what are going to be the key growth drivers for you?
So in the packaging segment, we have aseptic packaging, we have flexible packaging. So there is a growth in the aseptic packaging. For H1, we have the highest ever production and sales, despite the capacity constraints that we've been witnessing for the last few years. So we've sold, at least 5% more in this quarter in volume terms as compared to the same period of last year. We've also done well in specialty holographic films. It's the other, the flexible packaging where, there is a bit of flattish volume because, we were transiting with the GST and the manufacturers don't want to order new packaging unless they're have more clarity on the MRP to be printed with the revised GST things and all that. So I don't think so there's any fundamental issue. And given all these fiscal benefits, I think the H2 and the FY27 is going to be a great year for the other businesses as well. We've commissioned our aseptic packaging enhanced capacity from 7 to 12 billion packs a year now. So from January, when the season sets in for the aseptic packaging, which is typically from January to August, we'll surely see a much larger volume in that particular business segment for sure. And other business segments will also rebound after this GST transition that has been now taken care of.
Right. When you're saying that H2 will be better and even FY27 will be slightly better where we are currently, which will be your levers of growth? Which are the pockets you're seeing that the margins will be better and the growth will be even better what we are seeing currently?
So I think we've commissioned our aseptic packaging in India. We are also going to commission aseptic packaging in Egypt. We are also close to commissioning our WPP project in Mexico and our recycling in Noida. And all of them are going to be the growth drivers in the years to come, starting from FY27 onwards. And surely we are looking to add about 3,000 crore of additional top line coming from these investments that we've made. So surely FY27 and 28 we'll have the full impact of these new investments which will come onto stream, and we will surely have a much higher revenue and the profitability in the years to come by for sure. While the debt has already been added more or less to finance those facilities, but now, as and when these are commissioned, the revenues and the profitability will start kicking in.
All right, Mr. Bhatia, thank you so much for joining with your views.
Thank you. Thank you. Thanks a lot.
With this, it's time to take a very quick break, and after the